expenditure cycle, the primary external exchange of information is with suppliers. It has four parts: ordering materials, supplies and services, receiving and storing these items, approving supplier invoice, and lastly, cash disbursement. So now let us take a look at the first part of the expenditure cycle. The traditional approach is called the economic order quantity, and its goal is to maintain enough stock so that production doesn't get interrupted. An optimal order size is calculated by minimizing the sum of ordering costs, which include all expenses associated with processing purchase transactions, carrying costs which are related to holding inventory, and lastly, stock out costs which result from inventory shortages, such as lost sales and production delays. The formula is also used to calculate the reorder point, which is the inventory level at which any order should be placed. The materials requirement planning, on the other hand, seeks to reduce required inventory levels by improving the accuracy of forecasting techniques and carefully scheduling productions. A just-in-time inventory system attempts to minimize, if not fully eliminate, finished goods inventory by purchasing and producing goods only in response to actual rather than forecasted sales. Next up, let us take a look at the source documents. The need to purchase goods or supplies often results in the creation of a purchase requisition, while a purchase order is a document or electronic form that formally requests a supplier to sell specified products at designated prices. The information technology helps improve the efficiency and effectiveness of the purchasing function. The electronic data interchange reduces cost by eliminating the clerical work associated with printing and mailing paper documents. Second, the vendor-managed inventory gives suppliers the access to sales and inventory data. While in reverse auctions, suppliers compete with each other to meet demand at the lowest price. In pre-award audits, internal auditors visit each potential supplier in final cut to verify the accuracy of their bids. And lastly, procurement cards are corporate credit cards which can be used with specific suppliers for specific types of purchases. Now, let us take a look at the threats in ordering goods. If you run out of merchandise, you may lose sales. While if you carry too much merchandise, you incur excess carrying costs and have to mark the inventory down. Threat number 2. Ordering unnecessary items also incur carrying costs and produce obsolete inventory. Threat number 3. Purchasing goods at inflated prices increases product costs and reduces profitability and damages competitive position. While purchasing them at inferior quality can cause costly production delays. Threat number 5. Purchasing from unauthorized suppliers may cause legal issues such as violation of import quotas. And lastly, kickbacks are gifts from suppliers to purchasing agents for the purpose of influencing their choice of suppliers.
The second step for the expenditure cycle is receiving and storing of items. In this chapter, we will also discuss the essential source documents, technology related to storing and receiving, and the threats and controls that the company will face. We will start off with the source document involved in this cycle. What is a receiving report? It is a document that has details about each delivery, including the date received, shipper, supplier, and purchase order number. The receiving report also contains a space to identify the person who received and inspected goods, as well as for remarks concerning quality. Here is an example of a receiving report where it shows the date received, the shipper, the supplier, purchase order number, purchase order quantity, and other details that are crucial to ensure the number and amount of inventory received. When the goods arrive, a receiving clerk compares the purchase order number with the open purchase order file to verify the goods were ordered. Another source document is the debit memo. A debit memo is prepared after the supplier agrees to accept a return or grant a discount. We will now proceed to the different technological advancements that would contribute to the efficiency of storing and receiving items. The first one is barcoding. What is a barcode? A barcode is a machine-readable code in the form of numbers and a pattern of parallel lines of varying widths, printed on and identifying a product. It helps in speeding up counting process and improves accuracy of inventory control and reduces possibility of human error. Another gadget that is widely used in inventory control is the radio frequency identification. RFID is a form of wireless communication that incorporates the use of electromagnetic or electrostatic coupling in the radio frequency portion of the electromagnetic spectrum to uniquely identify an object, animal or person. It also eliminates the need for barcodes to be in line of sight. Next up is the use of electronic data interchange and satellite technology. This is a useful tool because it helps in tracking the location of incoming shipment, improves efficiency of inbound logistics, and advances shipping notices inform companies when products have been shipped. Lastly, the use of audits will also help in the second step of the cycle. This is important to ensure and help the company cut costs related to freight and make sure that the billed freight costs from suppliers are correct. Next up are the threats and control. The first threat that entails storing and receiving of goods is accepting unordered goods and items. To prevent this kind of threat, companies should instruct receiving department to accept only when there is approved copy of purchase order. Another threat when it comes to storing and receiving goods are the errors in counting goods received. It is inevitable for humans to make mistakes in counting because a lot of factors are involved. Barcoding and the use of RFID will be helpful in getting accurate counting of goods, offering bonuses or incentives to employees for detecting differences. Lastly, command inventory control to count items transferred from receiving department. The last threat for this part is the theft of inventory. To prevent this kind of threat, the company should make sure that storage must be secured and has restricted access. Moreover, they should document all transfers of inventory coming in and out of the warehouse. Periodic physical count and reconciliation of records should also be done to double-check. And finally, segregation of duties is a must by separating those who have physical access to inventory from those who keep records. We now move on to the third activity in the expenditure cycle, which is approving supplier invoices. The legal obligation to pay suppliers arises when the goods are received. The purchase order and receiving report is matched if the orders are complete. The purchase order, supplier invoice, and the receiving report is what we call the voucher package. Once the approver has verified, the invoice is approved for payment. There are two ways to process supplier invoices: non-voucher and voucher. For the non-voucher, first, approve invoice posted to individual supplier records in the accounts payable file. This is stored in an open invoice file. The check is written to pay for invoice. Voucher package is removed from open invoice file. Invoice is marked paid. And then, the voucher package is stored in the paid invoice file. For the voucher system, there is an additional document called a disbursement voucher. This is created when a supplier invoice is approved. Disbursement voucher identifies the supplier, lists the outstanding invoices and indicates the net amount to be paid. So what are the advantages of voucher system? 1. Reduce number of checks that need to be written, because several invoices may be included on one disbursement voucher. 2. Simplify tracking all payables. Since the disbursement voucher is an internally generated document, it can be pre-numbered. 3. Voucher provides an explicit record that supplier invoice has been approved for payment. Accounts payable process of matching supplier invoices to purchase orders and receiving reports is a prime candidate for automation. Efficiency can be improved by requiring suppliers to submit invoices electronically, by EDI, and having a system automatically match those invoices to the appropriate purchase orders and receiving reports. In this case, only those supplier invoices that fail this matching process need to be processed manually. What they can do also is to eliminate supplier invoices. Companies know the prices of goods and services at the time they are ordered. So as soon as receipt of the goods or services is verified, all the information required to pay the supplier is already known. This invoiceless approach is called the Evaluated Receipt Settlement, ERS. For this, there is only a two-way match instead of three, purchase order and receiving report. This saves time, and saves money by reducing number of documents. An IGPA-sponsored survey found that non-inventory purchases 60% of all invoices processed by accounts payable departments were for amounts under $2,000. So imagine having an invoice for each item? That can be eliminated through a procurement card, which is a corporate credit card that employees can use only at designated suppliers to purchase specific kinds of items. This would improve efficiency since the company needs only to make one payment or all non-inventory purchases for one period. It would also simplify accounts payable through having only one monthly statement. Threats and controls. 1. Errors on supplier invoices. This pertains to discrepancies between quoted and actual prices charged or miscalculations of total amount due. For this, mathematical accuracy of supplier invoices must be verified. Prices and quantities listed therein must be compared with those indicated on the purchase order and receiving report. For procurement card purchases, users should be required to keep receipts, and the accuracy of the monthly statement should be verified. Freight expenses also require special consideration because their complexity creates numerous opportunities for mistakes to occur. For this, provide purchasing and accounts payable staffs with adequate training on transportation practices and terminology. For example, full freight allowed means the supplier is responsible for freight costs. For detective control, have internal audit periodically verify accuracy of freight bills and invoices. Mistakes in recording can result in poor decision-making. So, compare the difference in supplier account balances before and after processing checks.
The final activity for the expenditure cycle is cash disbursements. The cashier reports to the treasurer, who is responsible for paying suppliers. This segregates the custody function which is played by the cashier. Authorization, the purchasing department, and the recording, accounts payable department. Payments are made when accounts payable department sends the cashier voucher package. Threats and controls. 1. Failure to take advantage of purchase discounts. There should be properly filing, such as having approved invoices be filed by due date. 2. Paying for goods not yet received. Compare quantities indicated on the supplier invoice with the quantities entered by inventory control person. For verification that services were performed, cleaning or painting, this can be done through carefully reviewing of department expenses. For travel and entertainment expense. 1. Require all employees to use corporate credit cards for travel. 3. Duplicate payments should be approved for payment only when accompanied by a complete voucher package. Original copy of an invoice should be paid. When check to pay for an invoice is signed, invoice and the voucher package should be cancelled, marked paid, to prevent resubmission. 4. Theft or misappropriation of funds. Access to cash, blank checks, check signing machine should be restricted. Implement strict access controls such as passwords and user ID. Also, keystroke logging software could infect the computer used for online banking. For this, designate a specific computer for online banking to restrict access to that computer or the treasurer or whoever is responsible of authorizing payments. Fraudulent disbursements. This can be done through proper segregation of duties, authorization, custody, recording. Check alteration. Check protection machines can reduce risk by imprinting amount in distinctive colors combination of red and blue. Issue special links. Use Positive Pay, the service offered by banks which is sending a daily list of legitimate checks to the bank, which will then clear only checks appearing on that list. Bank reconciliation. Plan and monitor expenditures to avoid cash flow problems such as making a cash flow budget.
In summary, there are 4 important activities in the expenditure cycle. 1. Ordering materials, supplies and services. 2. Receiving and storing these items. 3. Approving supplier invoices. Cash disbursements.